After the last few weeks, I think it'd be really nice for us to have a really low-key, not a lot of drama kind of weekend. This may be that week, but don't quote me on that. All right, what do we got going on this week? It is a short week. We got Easter week, Good Friday coming up. The markets are closed on Friday, and they're closing early on Thursday. Tuesday, we have the New York Empire Manufacturing Index report. If it is less than expected, that will be good for rates. And by the way, we have had rates go up the last 2 weeks. It's been pretty brutal, but there's an opportunity for some rates to come down this week on Wednesday. Wednesday is going to be the big day this week. Retail sales reports coming out. If those numbers are below expectations, we can expect to get some rate improvement. We also have a 20-year bond auction on Wednesday, and Bank of Canada is going to make their Fed fund equivalent decision. We also have Fed Chair Powell speaking on Wednesdays. Wednesday's a big day. Thursday is the next big day. We got European Central Bank making their rate decision. We also have initial and continuing jobless claims. And then we also have, not really going to affect the bond market, but we're going to get a look at the National Association of Home Builders Housing Market Index. How are they reacting to all this tariff turmoil? How is this going to impact them going forward into the summer and their prime building months? That's about all we have for the news. Let's look at rates. We ended last week above 7% again, conventional. Up to 7.2 for conventional jumbo. We'll break it on down on the VA front. Hey man, this was ugly. All right, you can't, turn the lights out. It's still ugly, people. All right, we went from about just around 6% on April 4th, all the way up to above 6.5%. With some good news this week, we may get closer to 6.25. But there's a lot of turmoil, a lot of overreaction, a lot of emotion in the bond market right now. So we just got to take a look. We got to wait and see. But it'll be a short week, and that'll be nice, I think, for everybody. But we definitely need these rates to come back down. Hey, and while we're on the topic, I want to go over one thing real quick, and that is all these fears of a recession coming up. Well, you know what? What happens to mortgage rates during a recession? Right now, obviously, we're not in a recession. Despite what you're seeing on the news, we're not in a recession. But every time our country has gone into a recession, well, certainly the last 6 times, or actually 5 of the last 6 times, interest rates have actually gone down. The last time, with COVID, we had a mini recession, 3.75 down to 2.75 interest rates. When we had the Great Recession in 2008, 2009, rates dropped from 6% to 4.875. So you can see, and then you go back, 7.375 down to 6.75, 91, 11% down to 8.75%. So we have had, and then 1980, early 80s, they dropped from 18% to 13%. Can you imagine that? Talk about bringing home prices down if rates got that high. So, right now, we're not in a recession, but for those who fear us going into a recession, hey, when that happens, rates will go down. All right, and guess what will happen to home prices? Home prices will stay steady, and they'll start going up again. All right, mark my word. You guys have a great week. Have a blessed week. We'll talk to you later. Aloha.